Welcome back to Bottom Line. There are more mixed signals about the direction of the U.S. economy. The Labor Department reports the number of people applying for unemployment benefits fell last week by 5,000 to a seasonally adjusted 388,000. That's the lowest level since early April. And even though housing starts fell 0.3% in October to a 628,000 annual rate, the number was still more than forecast. Michelle Girard is the senior chief economist at RBS. And she was one of Bloomberg's most accurate forecasters on the economy, which makes her a Bloomberg best. And she joins us from Stamford, Connecticut. Michelle, welcome back to Bottom Line. Thanks so much. Well, at least for the moment, can we consider the number of layoffs in the United States to be contained?
It certainly looks that way. I mean, we're now looking at a 4-week moving average, which is the lowest level that it's been in about 7 months. You know, we haven't made a lot of progress. We are sort of holding around that 400,000 level. We aren't able to move significantly below that. But boy, I tell you, with everything that's going on, the uncertainty, the volatility in the markets in particular, I think it's pretty impressive that we're not seeing layoffs rising. And in that sense, I'm very encouraged by the results that we're getting.
Michelle, the economy is growing, but just not at a fast enough pace to generate many jobs. 2 weeks ago today, the Fed projected that it's going to be at least until 2013 before the jobless rate in the United States drops below 8%. But we have seen reports this week that show manufacturers are producing more goods. How will a rebound in manufacturing change the jobs picture and the overall economic outlook?
Well, you know, I mean, manufacturing is a relatively small part of our economy. It is clearly outperforming the broader economy, in large part because of the strength that we've seen in exports, helped by the weaker dollar, and the fact that away from the Eurozone, we're seeing decent growth still in many of the emerging market countries. And I think that we're going to continue to have that support, although if the global economy slows a bit, we may lose some of that. But I think the bigger issue, of course, for employment is the ongoing weakness in housing, which hinders construction activity. And of course, on the service side as well, there's still, and this will get counted in the services, but you can still see that firms would prefer to hire temporary workers than permanent workers. It isn't that they don't have the funds to hire more people. It's just a confidence issue. And until the economic outlook, I think, is more clear and firms are more confident about the future, we're going to see hiring sort of subdued.
And there is a possible wrench in all of this, and that is Europe. If the debt crisis in the Eurozone worsens and it does trigger another recession on the continent, will that have a crippling effect on U.S. exporters, or would they be able to weather the storm?
They'd be able to weather that. Obviously, we get that question a lot. What does the recession in Europe do for the U.S.? And the truth is the direct exposure of the U.S. economy through exports to the Eurozone is not significant. I mean, I'm not to say that we wouldn't perhaps see a tenth or two off of GDP, but the truth is the greatest way that it could impact the U.S. economy is if it leads to a tightening in financial market conditions. You know, the equity market takes it on the chin, and as it starts to slide, consumer confidence declines even further, and consumers pull back, and businesses get hesitant, and what little hiring they are doing suddenly gets put on hold. I mean, that's how it ripples through, I think, and creates the most significant risk for the economy. To date, I'm surprised financial market conditions judged by your Bloomberg index they're certainly tight, but they're nowhere near what we saw in 2008.
And Michelle, you were just talking about our index, the Bloomberg Consumer Comfort Report, Americans' outlook on the U.S. economy. It's at a 4-month high, and that is the best reading since July. Our senior economist, Joe Brusuelas, says that some pent-up demand is being released. Are consumers regaining some of that confidence you talked about that was lost back in 2008?
Yeah, I mean, whether or not it actually shows up in the reported confidence figures, because they are a little bit of a mixed bag. The bottom line is they are out there spending. We just had a great retail sales number for October. It looks like consumer spending in the fourth quarter will be better than it was in the third. Obviously, in the third, it accelerated over to 2.4%. It was barely, 1% over the first half of the year. So it looks like even though consumers are still, relatively downbeat in general, a lot of confidence measures are at recession levels. They are still spending. I think that's the most important takeaway.
Michelle, let's talk about housing if we can for a moment. Demand for new homes is weak. Mortgage rates are at historic lows. Housing prices continue to fall. Why hasn't that been enough to help the housing market? It's still the Achilles heel of the U.S. economy. And we should point out, previously occupied homes go for about 30% less than the price of a new property.
Right. Well, there's a lot of things. I mean, housing is just simply has, I think, some structural issues, in particular, obviously, the inventory overhang that needs to be worked through. Housing is just not going to be a sector that is fixed quickly. I think on the good news, on the good side, we've got construction activity as low as anybody ever thought it would get. I don't see a lot of downside risk. And even on the price front, I think the news there, if you exclude the distressed home sales, is actually a little bit better. I think a big thing, though, rather than we keep saying housing hurting the economy, the uncertainty about the economy and the job situation is also equally a detriment to housing. They sort of go hand in hand here, and I wouldn't discount the impact that a better economic backdrop and a better job market would have on helping the housing sector speed its recovery along.
Now, Michelle, I only have about 30 seconds left, but I have to ask you quickly, over the past year, apartment permits, they've surged over 60%. Why hasn't this been enough to help offset the steep declines that we've seen in single-family home building?
Well, it's a smaller sector, and of course it's almost contrast. Because people are not buying single homes, they're more inclined to be renting in the current environment, either by choice or just because they can't get the credit to do so. We're seeing a better activity on the multifamily side.
Michelle Girard, she's the senior chief economist at RBS, joining us from Stamford, Connecticut. Michelle, it's always a pleasure. Thanks so much.